We've been bringing you recommendations from fund managers and strategists alike on where to invest outside of the typical everyday emerging markets. Our next guest specializes in sub-Saharan Africa, and he's here to give us some picks from the area. He's Christopher Hartland-Peel, Africa Equity Research Head at Exotix Holdings. Christopher, we just went through that headline there on Tullow. We are hearing about the potential here for commodities really firing up the economies there in sub-Saharan Africa. How leveraged is this region, though, to the global recovery and demand for oil?
Presently, they're not leveraged at all because there's no oil production. The oil production in Uganda and in Ghana will be coming on 2010, 2011. It's going to have a very significant impact upon both the Ghanaian and the Ugandan economy. The reason is straightforward, is it's high value-added commodity, and it's going to build in strong growth. We estimate that this could be in the region of 10% per annum growth for the two countries going forward for 2011, 2012.
It does seem what you're talking about there, though, is the projection for growth. Does that mean that right now we know you're active, but you're out there and buying into Ghana and into Uganda? I mean, what are you purchasing right now?
Our research is covering both markets, and we are looking at the consumer goods sector, the breweries, and also the banking sector. And we feel that these will be the major beneficiaries of the growth, and it's one where international investors can participate in the markets.
So we do know, though, that the Monetary Policy Committee in Ghana will be meeting on February 19th. So any potential move on rates could be affecting the financial sector you're talking about. What are your expectations there?
Not in the short term. We don't see
no move in the short term.
Nope. And the Ghana Monetary Policy Committee meeting is managing the situation until the oil starts flowing. When the oil starts flowing, we'll be seeing strong build-up of foreign exchange reserves. We'll be seeing lower budget deficits. We'll be seeing a stable exchange rate. And then there'll be spending within the economy, social spending, education, health, and this will go down into the regions of the various countries. Now,
if Ghana does end up being one of the world's top 50 oil producers, as Tullow is saying it will be, obviously they've got interest in saying that, who are the potential customers? Who's going to be most active in those markets?
Well, it'll be the feed-through effect. The government, it'll be like the economies in Botswana. The government's foreign exchange reserves will increase. From that there will be spending in the domestic economy by the government. Which is what we see as the mechanism for the transmission to the real sector of the Ghanaian economy.
Now, whenever you talk about tapping into any frontier market, they tend to be less liquid. There tends to be a high degree or perceived high degree of risk to putting money to work there. I mean, Ghana's benchmark index, I'm looking at the stats here, they were the world's worst performer in 2009, but one of the best of 2008. Seems to be more of a roller coaster than anything else. What are you projecting this year? Will some of that volatility moderate?
You see this roller coaster, you're quite right, and actually the roller coaster's gone on for about 15 years, and it's with election time. 2007, 2008 was election time, and that's when it fell. Going forward is that presently domestic interest rates in Ghana are 21% or so. That's what Treasury bills are yielding, and this is one of the reasons there's big returns on Treasury bills as against equities. Looking at the stocks, we see Guinness Ghana, we see Ghana Commercial Bank. Ghana Commercial Bank has some 140 branches. It is well managed, and not only that, it has a low price to book ratio.